Troy has become a stock market analysis wizard of sorts. Um, and he's had a tremendous track record with stock options, specifically leaps and even short-term options as well. And we haven't had one of these like actually breakdowns in a while. You've done it on tour a few times,
Yeah.
but a lot of
killed
people, the vast majority of people were not at one of our tour stops.
Yeah.
So
What percentage? I'm going to cut you off for a shot, but what percentage did that cost them by not going to the show for
Well,
$70?
so that's the thing, man, and I'm happy that we're back in the forefront of things to speak.
Hit the like button,
please, and share with 5
this
friends.
Is free information. This could potentially change your life. No cap,
especially if you listen and not complain.
No cap, all facts.
So we got to preface this by saying Wednesday we're gonna have a full. You want to go there first?
Let's go through the presentation first, and then we'll say it later.
Because let
me orchestrate the show.
No, because it's more of a preview type situation.
Let me produce the show, and
oh, you're on your Mike Bibby right now. Okay, I won't spoil it either.
Yes.
Oh man, so it's been a minute. I'll be honest with you. It's been a long while since we had an opportunity to sit back and really teach about trading and about options trading, to be specific. And so we're gonna give you a little preview of how we're gonna start moving forward, especially with EYL University, especially us at the forefront of it, because it's important, right? Like people can understand how to create a brokerage account. Some people have understood how to trade equities, and that's great. But most people, especially over the past 5 years, are trying to figure out how can we make money trading options, because that's where they see all the percentages. And we have to say, and we have to preface it by saying, trading has considerable risk.
Yes.
But trading options has even more so of a considerable risk. All right. And so we're going to preface it by some of the things that we're going to be talking about over the next couple of weeks. So the first thing is, what are options contracts? And it's very important that you understand the difference between the two, right? An options contract is really not the obligation, right? But the right to, right? So you're not obligated to buy a share, but you have the right to. And so each contract is worth 100 shares. And so when people are talking about, I want contracts, that's really the equivalent of 100 shares. So if you see somebody with one contract, that's equal to 100. If you see somebody buying 2 contracts, they have the right to buy 200 shares. Now, that doesn't mean you have to, right? And we'll break down that even further when we talk about exercising. But I want people just to understand that, all right? First thing you got to realize is that it's really a predictable type situation, right? So when you're talking about options, you're talking about the predictability of a stock moving north, right, appreciating, or moving south, depreciating. And when we're talking about moving north, we're talking about a call, right? And so if I make a call, I'm making a prediction saying that the stock equity is going to move upwards or it's going to move downwards, which would be a put. And so most times you see people saying that they made this money, and if they had a call, so you see the word call in front of it, that means they said that the equity was going to move up a certain amount during a specific time. And a put would just mean the opposite, right? So if the equity moves down in that specific time, money is going to be made or lost. Now, there's a couple things inside of there that you have to figure out, and that's the strike price. And so the strike price could be anywhere in the range of $10 to $100 of the actual equity, right? So if we take a company like Apple, and Ian, you spoke very well about it. It's trading at $175. Well, if I ask you, do you think in the next 2 years Apple can raise its price target to $180? Most people would probably say yes.
Oh,
if you agree, yes, put yes in chat.
That's a home run. Yeah, that's a home run.
That's a home run, right?
Yeah, even 205 is a home run.
Right, so that would be a call, right? And there's a premium that comes with that. So you're buying that number in the event that it goes up, you make money. Now, if you're a pessimist and you think that Apple won't do that in that time frame, right? Then you would make a put. And if that number goes down, then there's also money that can be made. And there's a premium that's get paid. So most people don't realize this is how it works, right? When I'd say $175 is what Apple, the actual equity costs, that's not what you're paying when you're buying an options contract. You're actually looking at the bid and the ask, right? And so when you think of bid and ask, I want you to think like when you're going to buy a car. The bid is what the dealer is going to tell you the car costs, right? The ask is what the dealer is going to tell you what the car costs. The bid is what you're willing to pay. And so
it's you negotiating the price.
It's a negotiation process. So these margins are where the brokerages make a lot of money, and most people have no idea how they make the money. But this is it, right? So if I wanted to buy the contract and it was $180 strike price and it cost me $2, they're going to say, all right, I'm going to charge you $275 for it. And so that margin is where they're going to make their money. Now it's not $275. Actually, it's going to be moved. You're going to have to actually move a decimal point across. So it really becomes a $275 per contract situation. And so you have to know this, which is a steal, right? Right. These are hypothetical numbers, right? So before we do anything, we need to know all the parameters of that, right? And on top of that, we're going to have to figure out how to find contracts that make sense, because some of them are overvalued, right? If you looked at NVIDIA contracts right now, you probably say to yourself, all right, these are too expensive for me. This is too expensive. I can't afford this. I can't. And they probably are, right? Because NVIDIA, as you see, has trended north for the past 6 months. It hit an all-time high today. It's trending toward $1,000, which is incredible. And so it becomes a higher premium based on the trend of the actual equity. So we're going to figure out how to use undervalued contracts. And there's a very unique system that we use to figure that out, so that we always have the win built in anytime we buy into contracts. And then the last piece of what I've been doing with trading options is I've been using AI. And it's probably been one of the same way that you hear Shadi talk about using AI in terms of media, and Ian using it in terms of media.
I think it is, bro.
I'm using it in terms of trading. And so one of the things I found is like, look, there are plenty of experts that are analysts and they get paid hundreds of thousands of dollars to do their job. I said, that's great. All I need to do is find out where they're reporting, take their report PDF, and have my good friends over at AI or ChatGPT or any of the ones that can actually decode PDFs and tell them to summarize it. I prompt them to exactly what I want. At some points, I'll say, hey, give me expedited target price for the next 6 months, and it'll do that. If I do that over 6-7 experts, now I have a great consensus.
You have a great median strike. Yep.
I can figure out what they're thinking based on the research that I'm doing. And that gives me a nice target to find out where I'm going to put my strike price, right? So all these things are what we're doing to evaluate how we're going to trade our options, right? Because it's a delicate process. It is a sensitive process, but it could be a very rewarding process. And when we do that, we get results. Now, I'm not one, and you know this, and y'all probably know this, I'm not one to gallivant and talk about results. But if we're going to show results, I figured this is family, this is Market Mondays, my earners at hand. Let's go through the scoreboard of some of these results, because not only are we talking about trading equities and trading options and telling you, hey, these are the things that we're looking at. Now we're actually implementing these things and winning.
Before you show them the results,
okay.
Great production moment, Rashad. Go ahead.
Tell them, explain the AI play just like you did in Chicago.
All right. So
or should it be kept for university?
No. Trust me.
Okay.
All right.
This is valuable. I love y'all. I love y'all so much, man. I love y'all so much.
Here's how this is gonna work. And I kind of just broke it down a little bit, but I'll give you dead specifics. All right. So I look at a company like HubSpot. I look at its chart. I look at its trend. I'm looking for the support and resistance over the past year. I'm looking at support resistance over the last 6 months. I'm starting to see trends. I see it in Salesforce. I see it in CrowdStrike. I'm starting to see that there was a rise during the pandemic. There was a great pullback. It's almost like a perfect mountain, and we're starting to see it climb again. So, all right, let me start figuring out how we can take this advantage of this. And so I look inside of HubSpot, I look at where all the experts are, figure out where the institutional money is going versus the retail money. And that's important because I want to know where institutional investors are putting their money, because that's where I want to put mine, right? So if I see 80% of the equity is owned by institutions, BlackRock, Vanguard, a number of institutions, I'm all right. This is something that they're invested in, especially in tech. I need to be behind that. I take their expert opinions. I download the PDFs. Now, these PDFs are 15 to 20 pages. Now, if you have the time to read it, great. Feel free. We got to maximize our time. And I think that's one of the best benefits of having AI is that you can actually maximize time. So download the PDF. put it in Anthropic, which is a great AI tool. Claude 2 is their version of ChatGPT. Prompt it. Hey, I need you to summarize this. Give me the strike. Give me the price target, and give me the guidance, the forward guidance for the next year. Put it in. Hit return on it. Within 10 seconds, I've got an entire page layout of everything I just asked for. I'm like, all right, that's pretty cool. Let me go find another expert. Prompt the same thing. And now I'm creating my own database from those experts who actually spend hours, have more tools, have more resources, have a bigger network. Now I'm just compiling all the information that they have.
Options cheat sheet.
And now I'm just creating my own formula to figure this thing out. I'm like, well, this is how AI really should be used. Let's maximize our time. Let's become more efficient. And so I'm saying to myself, perfect. This is exactly what I'm going to do. And so we did this in Chicago. It was like really the first test. And before I even presented, I spoke to Ian about it. I'm like, have you ever heard anything like this? And he was like, no, but I should have thought of it.
I wish I would have thought of it. I'm not going to lie.
And so I told him, I said, yo, I'm going to go for it tonight. I'm doing it with this company, HubSpot. Let's see how it goes. And from that moment, we did that show October 22nd in Chicago.
Yep.
HubSpot was trading at 410. And I think when I closed out the position, I actually put it in a slide in one of my results. I think it closed out at 590. So we're talking, I mean, and that's just percentage on the equity. So the actual option, I think I closed out at maybe 300, 400%, something crazy like that. But that was just using technology, using the research, using knowledge that I already had, right? Because we always talk about AI can make you, it's not going to make you smarter, but it can enhance intelligence. And this is one of those things. Like I already had the actual knowledge base to do trading, but now I'm like even more enhanced because now I'm even more efficient because the information plus the network is much more vast.
Okay.
How was that?
That was good. Thank you.
Appreciate it.